welcome all of the panelists to this exciting session. Affordable housing, is it the next big thing? I'll start with a brief perspective on this sector. India is a rapidly urbanizing economy facing development challenges associated with the rapid growth. One of the key challenges for such an economy is the expanding urban population. By 2031, an additional 600 million people are expected to join the urban India, make urban India their homes, a 59% growth over the 2011 census estimates. This transition is seriously going to impact the quality of life that cities offer or are likely to offer. By 2022, estimates suggest India will require approximately 110 million housing units, of which 30 million units will be required specifically for the EWS and LIG segments, at an estimated annual investment of $250 billion each year. So that's the market potential overall, an estimated investment of $250 billion required for 110 million homes by 2022. Where is this money required? 70% of this requirement is going to come through from 9 key states, key ones being Uttar Pradesh, Bihar, and Maharashtra, amongst the other states. As it's been said, government launched the Pradhan Mantri Awas Yojana scheme in 2015 with much fanfare. The scheme has an annual budget of $4.2 billion each year, with a target of achieving 50 million homes by 2022. The government has done enough and more in terms of incentives to developers and to the community at large for this sector. So there's been tax holidays, the infrastructure status to real estate developers. On the homeowner front, you've got the interest subsidy scheme, you've got the RERA that has come in across the sector, you've got a reduced GST rate for houses in the affordable housing sector. Long-term capital gains tax is made more attractive. Also, the falling interest rate regime over the last 2 years, with an interest rates declining by roughly 250 basis points, has also resulted in more affordability to the affordable housing sector. In 2018, in the budget, an affordable housing fund has also been created. Now, coming to the housing finance market, this market today is roughly $150 to $175 billion in terms of size. With affordable housing suggested at roughly $25 billion in terms of a market size for affordable housing finance, expected to grow to $90 billion by 2022. So there's been excitement all across on reforms from the government, investors seeking to deploy capital, real estate developers doing more projects in the sector and wanting to enter the affordable housing sector. So this leads to my first question to the various panelists. With so much euphoria on the ground, what do you think has been the on-ground progress so far? Anita, if I can start with you on this question.
Yeah, I think first of all, we need to be clear about the definition of affordable housing. It's been a much maligned word and a much used word. A lot of what you're referring to, which is 20 million shortage, 19 million shortage of homes, is largely EWS.
That's right.
And when we talk about EWS, we're essentially talking about homes which are sub 5 lakhs, sub 6 lakhs. That to me is not a space that the private sector is going to be able to get into and make economic sense out of. It really is the role of the government, either through their housing boards or through some forms of public-private partnership that can bring in land at zero to no cost and create that stock of housing.
This is in terms of the government providing access to land and developers doing EPC contracts or rental housing or some sort of model there.
Could be, and I think there are various models playing out given the importance that the current government is giving to housing for all. So for example, in the last 1 month, whether it's a Nagpur Improvement Trust or PCMC in Pune, the PMRDA again, they've all been announcing what you have rightly said, government giving the land, EPC contracts for 50,000 homes, 100,000 homes, 40,000 homes, which really will cater to that segment of EWS. Because otherwise, to make the economics work, in terms of buying land, constructing out, selling at a price which you can get a 5 lakh home out into the market, is not really the domain of the private sector.
So Anita, your point being that a large part of this demand should be led by the government rather than the private sector. That's from the EWS.
From the EWS side.
EWS
but
side.
Having said that, I think if you look at the LIG and you look at the entry level of the MIGs, there is definitely an opportunity where private sector can participate. Our own experience in the space is about 3 years old. I mean, we've been around as a real estate developer for the last 20 years, primarily in the mid and premium segment, done about 24 million square feet of development. But in the last 3 years, we actually launched a sub-brand called Happiness, which was focused on low-cost housing.
Okay.
And our definition of low-cost housing has been homes between 10 and 20 lakhs.
10 and 20 lakhs.
So we have 3 projects going on currently. We've launched about, we sold about 2,000 units in the market. We've delivered 1,500 homes. It's been an interesting 3 years experience, and I think as we go along, we can talk about it.
So let me ask Ujjwala, you've been in this space for a long time, right? What has been your experience, and what is your view on what Anita just said, that the EWS sector is essentially it should be more government-led than private-led in terms of participation, and because in terms of costs. So what is your view? What's been your experience in this sector so far?
See, we have been in this affordable housing since 20 years. Our major core is affordable housing. So we have constructed some buildings for EWS also, but as ma'am said, it is really difficult in present scenario because the land costs are too high. And constructing something for the EWS, it really becomes unviable for the private players. So it is very true that government has to take initiative, whereas for LIG and MIGs, private players can work really in a better way. And I think many people, first there were very few people, organized people working for the affordable housing. But now people have started, like Mahindra has also come into it, and many other builders have also come into affordable housing.
Do you see more competition hotting up in this space? Do you see more competition in the work you're doing?
More competition I don't see, because though builders are coming into it, the market is not still that great that people are taking a plunge.
Huge potential in the market. So
potential is there, was always there, and will always be there for affordable housing, because there is the real need for houses.
Okay. So coming to the affordable housing on the finance side, I'll start with dear Tripathi first. What do you see? What has been the progress so far? I mean, how do you see the business model in this space?
You see, from 2011 to now, the number of housing finance company from 42 had reached about 93, and probably by the year end, the number of housing finance company will reach to 100. So one thing you see that supply side of finance and demand side of the customer, that has largely been addressed by the government. Demand side, the Pradhan Mantri Yojana, which provides the credit link subsidy, benefit, sale construction subsidy, and lot many things, demand side has been largely addressed. So the finance requirement, which was really difficult about 4 or 5 years for a EWS or LIG borrower, he was never thinking of making a house because he was not expecting that he will get finance. Now the large number of companies on the ground providing finance, this market of providing finance is getting very hard. Now coming to another point, we say that whatever finance is required, as both the madam had just mentioned and you also mentioned, that roughly about 57% requirement is in EWS category, and rest requirement in the LIG category, and some requirement of MIG and other categories are there. So I am just confining my assessment of the providing the finance and the loan to EWS and LIG. 70% of working non-agriculture population is engaged in informal segment, and challenge come there only, because when you have a income tax return or banking habits and all that, everybody can go and give you finance. That doesn't require rocket science to assess in a borrower. Assessment of a borrower who is not having a definite cash flow because he is a small shop, vegetable vendor, taxi wala, or your maid servant, or what it may be. In that case, the assessment of the cash flow is a real challenge. Last 2-3 years, most of the companies which are coming new or the old, they have developed their model to assess this assessment of cash flow. Because if you fail to assess the cash flow, you will end up in the NPA and then the whole process of lending will go waste. So whole idea how you assess the cash flow, so the ability is gradually getting developed. Right now, few companies have developed a scorecard also, but most of the companies are in the process of developing. You see, these EWS LIG customers, most of them are first-time borrowers. 20-25% are only having civil record and other records. So in that situation, the assessment of a person or borrower is more important than any other thing.
So Ravi, how, you've been in this space for a long while. Take off from where Tripathi left is to how do you assess risk? How do you underwrite this risk? As he's saying that, most of these are in the EWS sector because that's the large, target market for the affordable housing segment. There is no stable income. There is lack of proof of income. So how do you kind of underwrite risk? What do you see what do you see as a business model there?
Yeah, hi, Huzefa. I'll just summarize what has been told by the other panelists. Like she said that we are in a segment which is upwards of a particular value, maybe say 5 lakhs or 7 lakhs. Similarly, where government intervention would be required for segments which are less than 5 lakhs. Similarly, as Mr. Tripathi said, that there are close to about 92 housing finance companies, and by the end of the year, probably we may have 100 licenses issued. So all in all, if you look at it, even with so many housing finance companies, each and every housing finance company focuses on a particular niche, particular market. And typically talking about Reliance Home Finance, we focus on ticket sizes which are upwards of 7.5 lakhs. And I think that's where we have developed an expertise to evaluate clients requiring loans of more than 7.5 lakhs. Most of our clients, unlike what he said, are actual challenges with the EWS. So most of our clients have a cash flow, which goes into the bank statement or which is reflected in the ITR. And more so, they also have a CIBIL score. So all in all, I think, what we lay a lot of emphasis on is personal meeting with the client, understanding as to how he's going to get his margin money in also. Because although in affordable housing, with the same capital, we can create a bigger book. So that's the incentive which a housing finance company has. The incentive what individuals have is, of course, they get interest subsidy. There is no GST that they have to pay on affordable housing. Similarly, the builders also have incentives. There's 8% GST there, and there's affordable housing fund which has been initiated. So all in all, I feel that it's a very it's for the first time that the government is focusing on all the three sectors: the builder, the end user, and the facilitator in housing. So while evaluating the client, while evaluating the credit worthiness of the client, I think there are three things which are very, very important. First thing is a basic assumption that the client, it's the first house of the client, it's the first home of the client that we are funding. And we as Indians, we have a lot of emotions attached to the first house because that's a security which you give to your family over the next 25 to 30 years. So I think the basic premises what we start is assuming that the client is not going to default. That's very, very important. The second thing is that if we meet up with the client to understand what are the sources of cash flow, as Mr. Tripathi has said, not very many times the cash flow may go to the bank account. So for this set of clients, of course, there are very few for us. But personal meeting up with the client, understanding what is the saving that he has made over a period of time, helps us to know what is the kind of cash flow that his business generates.
Okay. So let me ask you another related question more on the credit link subsidy scheme, the PMAY scheme. How have you seen that scheme being implemented, operationalized? And, Anita, this question is also from a developer perspective because ultimately the end customer is taking that benefit. So what has been, so what typically happens just for the audience is that, a customer who's eligible for a EWS, LIG or MIG home, he gets a subsidy from the National Housing Bank, which is essentially given to the bank that is disbursing the loan. So what has been the feedback and what has been your challenges in seeing customers getting that loan? Because it's important for you from a housing finance to disburse your loan. Plus, it's important for developers because if he's relying on that scheme, right, he needs that to be able to buy your house. So, what's been the progress so far?
As far as our experience is concerned in getting this subsidy, I think it's a seamless process. We get subsidy within 1 month's time.
1 month.
1 month's time of application, and we've received subsidy for the current financial year. Like just to put number to it, we've received close to about 29.5 crores of subsidy, which has been successfully distributed to about more than 1,200 clients of ours.
So 30 crore in FY18?
Yes, please.
For how many clients?
More than 1,250 clients.
More than 1,200 clients. Okay. Anita, any comments from?
Yeah, I think the disbursement, as he says, has been pretty quick. No issues there. It's really the number of customers who are actually eligible for the disbursement. Particularly the 2.3 lakhs at the lowest end of the segment.
Correct.
If you look at a typical project, so if you're looking at homes which are say between 10 and 20 lakhs, we found that about 15% to 20% of our customers are actually eligible for the loans, for the subsidy. The rest are not because they are
in
of
the
a higher
income bracket.
Right.
So 20% of your end sales customers are actually taking benefit of the scheme. Okay. Ujjwala, before I move to you,
Yeah, I would like to give one example in this. We have constructed one project in Kharghar in 2003, and that was totally for EWS. Means rickshawalas are there, then housemaids are there, then hawkers are there. Mostly all such people who don't have salary slips are there. Actually, the thing is that these people have money, but they don't have salary slips. So one of the groups came to us, the rickshawala group, and they wanted houses, and they didn't have salary slips, so it was really difficult. But we took the challenge. Actually, it was very risky, but that project has 200 flats, all one-room kitchen, and no bank was ready as usual because they didn't have any salary slips and anything. And we took the plunge, and we gave them the loan from our finance company, that is Haware Finance.
So you financed it on your books?
Yes. And I'm very happy to say that not a single defaulter, there is not a single defaulter in that project.
Default.
Yeah,
okay.
And that whole project belongs to this type of people. The rickshawalas, the housemaids, and the hawkers, majorly.
Okay.
So this is the one unique example, actually. But later we couldn't do these type of projects as the land cost started increasing. And the cost of the house was 2.5 lakhs.
Okay. So I'll come to the costs and on the land front differently, but just to complete the point on the housing finance. So what is, dear Tripathi, what's your view on the PMAY? What's your view on the kind of the customers who are taking these loans in terms of cash flow? What's your view on kind of NPAs? Because that's a point that she raised. What do you see as NPAs in terms of your books for these kind of customers?
I think from last 3-4 months, you have been reading in the newspaper that NPA is going to rise in this low-income segment houses and all that. Somehow I totally don't agree with that. My point of view that in any lending, if you become very crazy, there is a problem. If you become lazy, you will lose the market. You have to be very moderate in that, number one. Number two, right from selection of borrower to disbursement of loan, if a little eye is opened and you are not simply running for the growth of a company, you are achieving 50% of the result. Rest 50% requires close monitoring because these guys are not having regular cash flow. Any event happen in their family, their shop is closed or they are not able to earn on that day. When cash flow is broken, a default is likely to occur. So regular monitoring with these people with an empathy. I don't say that you go and say, give me money. When he doesn't have money, how he will pay? So regular monitoring with these persons will definitely ensure that your NPA will be the lowest. I am so happy that NPA in this segment in no income proof product is hardly about 0.5% for us.
So quite a low NPA
it's quite
for
low,
the segment.
but I can't say the first bouncing is always very high. The moment you put the first check in the EMI in their account, probably that may be returned. But by end of the month, if your follow-up is proper, then it will be recovered. The basic lending formula, the preventive measure and persuasive measure always helps to keep the NPA low. Second thing, these guys, if some unhappening happens, somebody expires, that the main borrower expires, the bereaved family will not be able to pay your loan. And if you are going to take action in SARFAESI for auction of the house, you are not doing a great service for the poor person. I always suggest that there should be, insurance should be taken. Insurance are available, monthly reducing term assurance plans are available. If the borrower dies in case of any eventuality or some problem happens, you will have a recourse on the insurance company, and bereaved family will not lose the house because that family has already lost the earning member.
So does that mean that this sector has low NPA because, it's a first-time home, people are wary of default, but what about credit costs or what about disbursal costs for housing finance companies? Are those a lot higher? Does that impact profitability? What's, before I move to you, Ravi, if I can get your view on that point.
Sure. So it's a very right point that you have just touched, Huzefa. In fact, I think at Reliance Home Finance, I think we are one of the very first housing finance companies because, affordable housing is a part of the business. There are separate teams to do business. There are separate teams to underwrite affordable housing. There are separate teams to collect also affordable housing finance cases. It's a part of our business. So it's a new concept that we have come up with, which is a CapEx light model. What we have done is that we have identified close to 20 locations in the country wherein we'll be coming up with satellite offices. These are CapEx light offices. These are just 300 square feet offices wherein, about 6 to 7 people sit. So the entire processing, underwriting of the cases is done from that offices. So with a CapEx light office, there are two advantages. You can be closer to the client. You necessarily did not go to a new location altogether, but these are in the periphery of the locations where your offices are already there. Like we have come up with the first office in Vastral, which is a place near Ahmedabad. So you are closer to the client because a lot of affordable housing finance activity is happening there.
So I think going closer to the customer as
we are closer to the client, number one. Number two, these are all CapEx light offices so that, the cost of sourcing the client, we are also very easily reachable by the client. So all these are advantages when you talk about affordable housing.
Okay. So the next question, and again for the developers as well as the housing finance, how do you assess opportunities in this space? The market size is huge, $250 billion of capex required for real estate developers. Essentially, market on housing finance growing from 25 to $90 billion. So there is a huge blanket of opportunity available. So how does a developer assess an opportunity that comes their way? Anita.
Well, I think at the end of the day, from a developer's perspective, it gets down to like any real estate location. And I think location in this category is even more important than location in all other categories. So when you look at states itself, filters around level of urbanization, how urbanized is the city that you're looking at, where are the sources of jobs coming from, how industrialized is the city, because those are indicators of people being able to afford homes in that category and wanting to live in that category. Then when you come down to specific locations, it is the commute distance from their source of livelihood and employment to the home, because there is a resistance to buy a home if you're located too far away from your workplace. There's a cost of transportation, which is a big impact for the segment. There is the fact that the family might be isolated and living around lack of social infrastructure and not necessarily feeling very safe. And so people often rather would postpone a decision to buy than buy something which is too way out.
So good location, good connectivity, good infrastructure as well is important.
So in a city like Mumbai, for example, the rail at least offers an interesting solution. So if, for example, you have a project in the outskirts, you need to look at which are the employment pools where people are going to be working around, and can rail commute from their home to that location be within less than an hour. Then it starts making sense for people to take the decision to move out of, say, chawls or slums within the middle of the city to their developed homes where their children also get a better environment. Okay. So those become important factors. The other large factor, therefore, is land cost. The closer I come to the city, the more social infrastructure I have, the closer I am to a station, land starts getting costlier. So and then the homes are not affordable.
So I'm still going to come to this challenge a little later, but I'll pose the same question to Ujjwala here to say that, what in your mind, how do you assess an opportunity? So Anita's raised two critical points to say that, the industrial clusters, the location, the transport, and the infrastructure for end users to kind of stay there. I mean, what else do you believe adds to that?
Actually, transport is important because they need to commute daily to the work because they use the public transport majorly. Then the land is the major thing, I guess, because see, we have been doing affordable housing and all our projects are majorly at the periphery of the city. So, but still people who was priorly staying at Lower Parel or Dadar, they have shifted to Badlapur, which is so far away. But still they have shifted there because the station is the train is directly connected to Mumbai.
So growth in infrastructure is leading to growth of new peripheral markets, and that's leading to growth of affordable housing.
Affordable housing, the house will be affordable only in the periphery of the city. In the city, the cost can never be less. The house cost can, low cost housing is very, very impossible or it is very difficult according to me in the city. But at the periphery, 10 lakhs, 12 lakhs, 15 lakhs, that type of range of houses is possible in the periphery of the city. And for making it more workable, you have to have very good infrastructure. The connectivity have to be very good. Then people shift from the city to these, for example, Kharghar. Many people from Mumbai have shifted to Kharghar, New Panvel, plus they have shifted to Badlapur because the connectivity was better.
So essentially location,
yeah.
infrastructure and transport, you've got to be close within 1 hour away from the end use or, to where a person is working, and have a good development to be able to have people move from wherever they're staying to a good kind of organized development. So that's the way you assess an opportunity.
Now the opportunity is in Palghar, because Palghar there is land also, plus connectivity is also better.
Yeah.
So people have looked from Western Line, people have started looking towards Palghar. We can have an affordable home in Palghar, as well as it will be easy to commute to the city.
Okay. So as infrastructure is growing within, in terms of roads and railway, new centers of affordable housing, let me put it that way, is growing, and that is leading to a growth in the sector. Is that the point?
That will play the major role.
That will play a major role. Okay. So, dear Tripathi, in terms of opportunity, how do you look at the entire canvas of affordable housing finance? How do you assess opportunity? How do you assess end customers? Which segments, which geographies to go through? That's a question for you, and then I'll come to you with the same question.
Yeah, I will simply put it that way. If you say the 2 crore houses are to be constructed, part of them are already over, but in the next 7 years, as India Rating and many research companies have said 2.5 crore requirement is there, take 2 crore only and take 10 lakhs rupees as average cost of the houses. In periphery of Mumbai, it may be 25 lakhs rupees. In smaller cities, because tier 2, tier 3 cities are developing equally. It is not that the requirement is only in 8, 9 big cities. It is requirement is all across. So in that situation, 20 lakhs crore rupees requirement in EWS LIG is there. These guys are going to take loan because they don't have the money to buy their house on their own. So roughly about, if 80% LTV you keep, 18 lakhs crore rupees requirement will be there. India Rating has already assessed 6 lakhs crore rupees requirement is there for loan, up to 15 lakh rupees loan ticket size. If you take 25 lakhs rupees ticket size, it may be 17, 18 lakhs rupees required. It's a humongous opportunity. So even if all banks and all housing finance companies which are engaged in the process, they will have a huge market to do it. But where is the market? In PMOI, the little problem is there, though PMOI scheme is a game changer, it is a revolutionary scheme, I must say. The only thing they have taken the urban centers, which are 4,041. If you take census report, the country has got roughly about 4,000 census towns, which have 5,000 population and above, and these are located on the highways, national highways, state highways, or in the district highway roads. And these centers are equally developing, where the people from countryside are coming and making their houses. there also 6, 7, 8 lakh rupees requirement of loan is there. That is not covered under the PMOI. Probably the government is considering how to increase the scope of PMOI there. Because unfortunately, these centers are falling in the Gram Panchayat. And the Gram Panchayat, you have a very less subsidy, only 2 lakhs rupees loan is required as per government PMOI scheme. Here, their subsidy amount is quite minimal. And here, subsidy amount is 2.67 lakhs. If that is also covered, there is a huge requirement for every player, and most of the housing finance company, they are operating in the Gram Panchayat area, as ma'am has mentioned, Palghar, peripheries of Mumbai, or peripheries of any town. So how we do, we penetrate to the deeper market, not typical to the countryside village, but these towns which are developing on the various roads, where people are having their shops on the ground floor and the house on the first floor. This is what the real thing. Second thing which is coming, it is not entire country is developer-led. Still in India, 50% houses are constructed on their own land. That's why PMOI has a vertical beneficiary-led construction. There, if borrow customer is not taking loan, 1.5 lakhs government of India will give subsidy through a state government in PMOI scheme. If customer takes loan from all of us, he will get 2.67 lakhs subsidy for that. So what we do, we try to convince the customer, why take a loan from us and take higher subsidy amount. The construction on self-plot is one of the major opportunity available to the housing finance company, because still the flat culture is not across the country.
So what I hear you say is you're focusing more on self-developed homes for people to take finance for developing their own homes. You're focusing on new locations that are coming up in the market, right? That's the way you're looking at this.
What we do, we look on both. We do not leave any opportunity. Wherever the builders are there, like in Surat, or you go to any part of Gujarat, you go to Tamil Nadu, you go to part of the entire Maharashtra, there are supply side of flat is there. There we prefer to give a flat loan. Okay. But there are locations, like if in Bangalore you go, people take the plot and construct the house. So there we give them plot plus construction loan. So we work on both the things. It is not one product, it is multiple products we are trying to focus. The whole idea is providing loan to take the house and take subsidy from under PMOI to reduce the installment.
Got it. Ravi, your view on how you assess an opportunity in this space?
Yeah, two things. We've been talking about affordable housing. While the overall mortgage market is growing at a rate of 18%, closer to 20%, the overall affordable housing is growing at a rate of more than 30%. So there is enough scope. I think from Pradhan Mantri Awas Yojana, the Housing for All by 2022 has given enough impetus on the developer side, on the housing finance company side, as well as on the client side, to make the best use of it and to avail and make their own homes, avail home loans and make their own homes. I think how we at Reliance look at it is that we work through the hub and spoke arrangement. Through our 51 offices, we cater to more than 100 locations. So once these locations start giving us a business of more than a particular value or more than a particular transactions, we open an office there. And from that office, again, we further penetrate into the further areas, in 50 to 20 kilometers from that location. So I think all in all, through the hub and spoke arrangement, we try to expand our footprint in the country and be closer to where the affordable housing finance activities are happening.
Closer to the end customers.
Yes.
Right? So one last question, I think we're running out of time. One last question from my side. We've kind of discussed it and I left it to the end. Land. There is enough and more challenge to be able to access land. And, the cost there also affects project economics, affects sales pricing, affects the price to the ultimate customer, and also affects housing finance. So that's the start of the entire affordable housing piece. So, what is your challenge that you see for, acquiring land, accessing land? And what's the quick economics that you would look at for a home in this segment?
I think it goes back to the point I made about location. It's really getting land at not more than a 10 to 15% of the total price.
So 10 to 15% of the sales price.
So suppose you're selling at 3,000 rupees, you would like to see land coming in at 300 to maximum 450 rupees. Beyond that, the economics won't work. But you need that as close to transportation, as close to infrastructure as possible. You tend to get that further down. The minute you go further down, the government does not have power or water to site, which means you spend at least another 100 to 150
your
rupees a square
infrastructure
feet
costs go up.
bringing infrastructure.
Yeah.
So it's kind of a balance. So you decide you come closer and you're willing to put that 150 rupees extra, but you will not get land at 450 to 600 rupees closer
Closer
to
to where you
infrastructure.
want.
So it's kind of a combination play. The government needs to identify corridors, push infrastructure creation there, ensure there are transport linkages, and then it's easier for us to make the economics work.
So essentially what I hear you saying is that government needs to focus more on infrastructure development for this sector to prosper. Try and, so as there is more infrastructure, obviously there will be more availability or access to land, and automatically that will bring in project economics into your profitability. Anything else on that front, Ujjwala, before I open it to the audience?
On that same lines, CIDCO has really done a wonderful job, because we had started our business with CIDCO in Navi Mumbai. So all the infrastructure was ready. Everything was quick, like all the drainage lines were laid off. They immediately the roads and all were constructed as soon as our construction had started. So it was very easy for us to get the customers also and to give the possession also. It was very easy. But whereas when now we have started in Thane or Palghar or Badlapur, everything we have to do. We have to run from pillar to post for the roads, for water connections, for this. The pipelines are not there because the project is at the periphery outside the city. So it becomes really unviable. The effort, we hardly believe, then we just start thinking that will this really be an affordable project, viable for us or no. So if the government gives the infrastructure on priority for such type of projects, then it will really work well.
So CIDCO is the example where the government has done enough. That's what you...
Yeah, CIDCO is the example.
CIDCO
really,
is the
yes.
example.